number 12 with RevRag at the Sales and Onboarding series. I'm Arushi, I'm your host for today's episode and the Founder's Office. In the last episode, we discussed with the product leader Pramod Mohandas from Kisht. We spoke about embedding AI into the core workflows and what product leaders think about it. And, we try to understand uh, different thought processes and how AI could be implemented at different stages and where it could not be implemented. So do check it out on our YouTube channel. But you know what? We thought this time we should do something different. So we haven't really spoken much about the fintech area, but in this episode, that is what we are going to do. So joining us today is Kannan. Kannan is the product leader at Flexmoney with over a decade of experience across banking, fintech, and Indian BFSI. Now at Flex Money, he's building affordable credit for Indians. What I mean by that is he's leading products that embed credit into merchant checkouts. In his previous stint, he worked at PayU, specifically the platform LazyPay, and he built India's first credit on UPI via Lazy UPI and multiple other BNPL products that together drove 5x growth. Thank you so much for coming on this episode, Kanan. Thank you so much.
Thank you for the invite, Arushi. Really glad to be here.
And the second guest with us is Neeraj. He is the co-founder and CPO at RevRag.ai. Now, Neeraj has worked closely with lenders and fintechs to embed AI agents into onboarding, risk, and different customers' journeys. So thank you for coming, Neeraj.
Thank you, Arushi.
So now to kind of start this episode, we want to understand your background, Kanan, like where you come from, like what all you've seen change, a bit about your professional journey. You can take us through your arc from BNY, then PayU, and then, till Flex Money now. How did shift, each move shift the way you think about building credit products?
Yeah, I think, see, first of all, I think mostly like a lot of product managers, I also started my journey as an engineer in itself, right? And it was at BNY Mellon where I had my first brush with product and the financial ecosystem in itself, right? It was
Mm-hmm.
a place which first introduced me to financial markets in itself, how the global financial ecosystems operate, talk to each other, and manage risk. BNY Mellon being a huge global bank, right? Its pillars are basically fundamentally based on being working at scale, large, managing the risk right, and being compliant all the time. Like compliance is first for them, right? So that in itself lay down the foundations of how I should think about finance, right? How I should think about fintech in itself. But I also it gave me a realization that a global banking ecosystem is, or a traditional credit in itself is pretty let's say slow and rigid to move. And that's what kind of pushed me to move into at that point the booming fintech ecosystem for India, right? The Indian fintech ecosystem. And I got a great opportunity to start it off with LazyPay, just when they were introducing the buy now pay later concept, which was never heard before in India, right?
Yeah.
For me, the learning in BNY was basically learning everything around finance and how exactly the world operates, versus a complete shift in LazyPay, where my entire thought process moves from a structured corporate ecosystem to a full-fledged startup, a mindset where probably I would say the perspective of the learning itself changes. It's like speed and customer centric thought process. So at LazyPay, I realized that a 10-second experience delay or an additional form can make or break your adoption in itself. So it kind of gave me an insight, right? A really good insight is that the financial products are not about just underwriting it right? It's also about the seamless design, trust, and the habit formation that you generate, right? Especially in transaction credit, because you need those everyday habits and the trust to basically drive that scale for you. So after that particular learning in itself, I think I have to reinvent myself when I joined Flexmoney, because it's a completely different perspective in itself. It again widened for me. So right now, in LazyPay, it was a full-fledged B2C ecosystem, and right now in Flexmoney, it's a B2B2C ecosystem. So I had to reinvent myself to not think about just a product line or a theme, which is transaction credit, but think about affordability or financial products at scale across an entire ecosystem. And right now, Flex Money is at the core of building a universal affordability platform, right? Which can work across merchants, can work across banks, can work across multiple credit products and multiple user journeys in itself. So it becomes, if I look back, right, my journey has been basically about the scale and shift. Compliance first at BNY, learn, be very respectful about compliance, become customer first at LazyPay, and now all of the above, and become ecosystem first as well at FlexMoney.
That's a lot of experience jammed back together. One thing that you mentioned is that you went from B2B to B2B2C. That is something similar to what we also experienced at RevRag. What can you tell us something specific that changed in the way you saw products shifting from B2B to B2B2C?
So when you are at B2C, right, your thought process is always about I have to serve the customer, right? The experience for a customer is unbreakable, right? So it's a one-dimensional thinking that you have. But when you think about a B2B2C ecosystem, your end user might be a user, right? But your primary user turns into a merchant. So in case of Flex
Yeah,
Money, just think about it, right? To serve a user, I need to first be adopted by a merchant. So I need to think about two sorts of adoptions, right? My product has to be, easy to understand for a merchant and valuable enough for a merchant to adopt, right? Similarly, on adoption, my product has to be easy for the consumer to understand and adopt. So if you think about it, I'm thinking about two separate loops at the same time and solving for two problem statements at the same time, solving for merchant adoption and solving for a customer adoption.
right. That's how you would put it, right? In like again B2B. Um, I mean the difference is serving two people at once,
Exactly.
compared to. So, Kanan, can you tell us about probably, I mean, you must have done a lot of tweaks in the product, right? Can you, if you think about it, can you tell us some tiny design the change that you implemented in, while in your time at FlexMoney and at PayU that kind of unexpectedly changed the customer behavior? Some prominent uh, change that you observed by tweaking it a little.
Yeah. I actually have a very, very relevant use case, right? So back in LazyPay, when we were building credit on UPI, right? It was a never heard before product, right? The Indian ecosystem had never heard about a credit on UPI, did not know there is a possibility of credit being available on top of UPI, right? So when we
Hmm.
launched our first credit on UPI product, which was termed as Lazy UPI, right? We saw a good traction on it, but we had expected significantly more traction, right? Now to figure out, what happened, why are we not getting the traction that we want, we kind of started deep diving. So before I come to an answer, think about an era, right? That is just around COVID, right? That's when exactly when UPI had started to, explode, right? So how did you associate UPI with, right? You always associated UPI as a debit instrument, right? You scan, whenever you make a payment, the amount will always get debited from your account, right? Now hold this thought. Right? So when we kind of pushed out campaigns and let's say our first GTM launch in itself, right? The
Yeah.
whole campaign was around for a beta consumer base, that okay, Lazy UPI is live. Click to transact at your favorite instrument or favorite merchant with LazyPay. Okay, you will think that okay, this is a good start. You can talk about benefits and everything. So when we deep dive, right, we understood that UPI is predominantly associated with something about debit. So the minute you tell someone that UPI is live on your app, right, they don't relate it to credit, they relate it to debit. So
Hmm.
the adoption by default goes down because they think that this is going to get debited from my bank account. Right? That's where we tweaked the campaign a bit, or at least how we rephrased it. The framing of that entire value proposition, we slightly changed it. we started highlighting something like, while I don't recall the exact phrase, it would be something like zero debit from your bank account. Okay, so the
Okay, yeah,
rephrased that framing in itself, right? It kind of changed how it was getting adopted. We started seeing a lot more traction on it, a lot more users coming onto our platform to learn more about, the UPI credit on UPI product that we have, and subsequently its adoption. So the lesson for me was very, very clear that sometimes it's not the product that needs fixing. It's also about how you frame it, how you position it, and how you showcase it to the user. It's a value proposition that you showcase to the user.
absolutely. So along those lines, I want to ask, did you observe some different behavior patterns from users from different regions? I mean, everybody has a different perspective towards credit. And like you said, you reframed it to, uh, zero goes out of your debit. So anything that you can recall how, because again, this is something very new for Indian users, and majority of users are from, smaller towns in tier two.
No,
So,
I think my observation is it's not like the behavior was different. I believe that for us, what we saw is that the behavior across the entire user category was almost similar, right?
okay.
So they were able, the minute you were able to understand that okay, there is a basically credit facility or credit on UPI that is available, right? The consumer was very quick to adopt because he is very familiar with a scan and pay feature, right? Now that he has realized it's not going to get debited from his account, but basically it's going to be from a credit line that is powered by, let's say, a wallet or something, right? He has understood that, okay, and he has understood the fact that there is easy liquidity, or the upfront liquidity that he generally doesn't have available with him, thereby making that particular let's say feature, which is the credit on UPI or UPI via credit,
Hmm.
predominant part of his life. So what we started seeing is that our feature, or the number of transactions, or the average ticket size that we saw, it was around 500, 600 only. Okay, but
Yeah.
the usage was across multiple offline, kirana stores and all merchants, supermarkets. So they started using it, using lazy pay, as similar to what they use Google Pay or a GPay for, right? So my
Okay.
observation, at least here, was that when you introduce a product you built on top of something a user is already familiar with, right, the adoption or
Hmm.
at least the usage is very similar to how he looks at it. Okay, and that makes it more easy for you to get more deeper penetrations and get better adoptions.
So, Kannan, as a result of this, will you also get the transaction details of these as compared to normal credit where like they have their own discretion, right? Where they
Yes, very true, because it was built on the UPI rail in itself, right? You do get an extent of, it's like, having your own ecosystem giving you answers back, right?
Mhm.
So when you do a BNPL integration or integration, into the merchant ecosystem, right, there is very limited amount of information that will be, available for you, right? You
Mhm.
won't know what product is being bought. You won't know the product category or any user data or anything you won't know. But in case of UPI, at least what we were able to leverage, and I absolutely loved about it was, you learn a lot about the user. You know where he's transacting, what he's purchasing, okay, and that gives you a lot of leverage to improve his user experience and also manage a lot of unsavory components like fraud as well.
That's a very interesting way that you put it. Since we are talking about lazy pay only at the moment, I want you to take us through the how the flywheel came together at PayU. Can you take us through the stages because you were there for quite some time? So
Yeah.
can you take us through the phases that you were in and how you see
Super.
the users behave, how the product was built, and some challenges that you came across or some cool moments. So take us through all of it.
No, no, happy to wins. A small, while the question is a one liner, but the answer, I'm just trying to compact everything together and try to make it concise and possible, right? So just think about a time when UPI was not that prevalent, right? It had just launched.
Yeah.
Just think about just a pre-COVID era in itself, right? When 2017, where there were, let's say, 30 million odd credit cards at credit card holders against 400 million odd digital shoppers, right? So think about that time, right, on how you went about digital shopping in itself, right? So BNPL is basically a conceptualized or a thought process that LazyPay wanted to identify and solve for, right? That's a gap that we saw. That's a huge wide gap. 30 million only credit card users versus 400 million digital shoppers who wanted to shop. The gap was pretty evident, right? And what LazyPay wanted to do was that we wanted to work with all the merchants to give user an option to pay later, probably a very short term timeline after which they can pay back, and really convenient. So what did we end up doing is that we ended up creating a one click solution, right? So you go to Swiggy, okay, and it's pretty prevalent as well, right? One of the biggest value proposition was, the success rates, or at least the super short, let's say, transaction journey or aha moment that we give to the user. You go to Swiggy, you set up your account once, okay. Then after, right, it's just a one click. You see LazyPay as a payment option. You click on it, and voila, your payment is done. Okay. That one click made it's basically convenience, right? And that's what we realized, right? Our users, regardless of whether they had a credit card or not, they love using LazyPay because it was a one click experience. And credit card is basically a big ticket product where you're looking for rewards, you want some cashback, some kickbacks and everything. But when you're looking at let's say 200 rupee, 300 rupee transaction, on most occasions you're not interested in a cashback or anything unless until it's going to give you a 25% cashback, like 30 rupees, 50 rupees on top of of a 200 rupee transaction, which you generally want. So that was how we started off, how I believe LazyPay kicked off the BNPL world, right? But we also realized that BNPL on its own, wouldn't stand, right? We needed more, credit utilization and everything. BNPL is only limited to the merchants that we are partnered with. So how do you get deeper penetration? That's when UPI was, kind of coming up. That's how it naturally came to us that, users who love convenience, who are a fan of LazyPay, right, would by default become, natural or organic users for UPI in itself. And that's how UPI, building credit on top of UPI was conceptualized, and that's how we came about that. For us, the challenger card was a very, very natural progression itself. We saw BNPL as well as credit on UPI put together under the, doing small ticket sizes in itself, right? Now, for to facilitate bigger ticket sizes where user is looking for a cashback or a kickback, right? The card seemed to be the most natural, form of, product that we offer to our consumers, and that's how the entire flywheel was built. Now, think about a use case. You can go to your favorite quick commerce merchants, do a quick transaction, enjoy, get an aha moment of not going through a carded experience or anything, begin with it. Go to your favorite offline retail store, flip your phone open the app, scan, make the payment, right? Now you go to, you want to have some vacations that you want to plan, you go to Make My Trip, you just enter your car, you use your card to finish that experience. So a single app is, or a single financial instrument is kind of serving every use case that need. That's how I would say we progressed, or we went on to build the flywheel that we built.
Wow. Uh, Karan, leading to just that, I have a question for Neeraj. While you explained how the whole process was, seamless for you once you started BNPL and then you built it on top of UPI. Neeraj, you've also built credit cards in your previous stints, right? You've built such financial products. Maybe I might be wrong, but you can clarify me on that. I want to ask you, from your experience with fintechs, when they scale fast on, BNPL or UPI credit, where do they often hit bottlenecks?
So I think that that is very interesting question, and I have seen at least twice, right? In my experience, so once in Moneyview, right, where that was a you can say very traditional and conventional product, right, of PL. And second time, yeah, I got the opportunity to work on the PPI based credit card, but that was short lived, right, due to RBI guidelines. But another time was during building line of credit, right. So I think there could be that multiple aspects, Arushi, right? I would say, right? Ki while we are scaling, right? So what are all the challenges, right? So I think it always starts with the credit, I would say, right? Because for example, I remember in MoneyView, they took almost 2.5 or 3 years, right? Till the time they got the confidence that like their underwriting models are like good enough, they can handle the volume, and they have seen at least the good spectrum, right, of the users they would be receiving, right, while they scale up, right. So because as we know that like in lending, giving the loan is the easiest thing, right, collecting is the most important and the most difficult one, right, which sits at the other spectrum altogether, right. But if I talk from another aspect as well, right, from product perspective, right, and then while my experience recently with the application of the embedded agents or basically the AI stuff altogether, right. So I would say, uh, for example, maybe so I have started seeing companies, for example, CarePay of the words, who have done the model testing and they are good for growth, right, but they do not want to follow the conventional playbook, right, of hiring operational people, right. So obviously at the start, let's say your metric starts like this, right, that for example 30% of your applications are 100% automated, right, and this gets flipped after 3 years or 4 years, right, and you tend to close to 100%, right. So now these companies are coming back and saying that like, hey, while we are gearing up for the growth, right, maybe is there any possibility we can eliminate the human elements, right, altogether, right. At least they are exploring the possibility altogether, right. Maybe is it at the customer support side, or let's say on onboarding altogether, because they know that like if they look forward to, let's say, disburse 100 cr, right, a month, right, so let's say they would need x number of people, right, and which will eventually become bottleneck. Obviously you cannot eliminate humans at all, right. So there will be a certain percentage which will always be there in the loop, right. But the question is that like from the conventional credit uh, business, right, and while they try to use the AI, right, is that a possibility? And that is where I think a lot of use case comes in. So what I was basically explaining in last 2 3 minutes was a mindset, right. If they try to kind of click on that mindset that like is there any possibility, so that is where these AI and the embedded agents could help you, right. So while you are preparing yourself, right, for scale up, that is fine, right. But once you change your gears for the growth, that is when the real challenge also comes in, right. Because now everything, if the loss comes into the picture, that will be on the huge scale itself, right. So and if you want to, let's say, for example, double down your growth every month, right. So like always the PNL leader asks, right, that like how many people do we need for it, right. Yeah, how much operational cost it's gonna cost us, right. Is that the proportional to the kind of volume we are looking at, right. So I think that is what recently these embedded agents and AI agents, because of these intrinsic properties, right, so we have been able to help them. For example, CarePay. Yeah.
You mentioned some really interesting questions towards the end, and I hope by the end of the discussion, all those questions will be solved because we will also talk about embedding AI into the whole journey, where it can fit, where it cannot fit.
Yeah.
So just to kind of break it into, two parts, Kanan, you told us about your journey at LazyPay, how you built credit on UPI for so many users. You made it accessible for Indians. Now you've shifted to Flexmoney. So, in brief, can you tell a bit about, what you're doing at Flexmoney, and from there on, we'll try to dive into it.
Sure. So, okay, let me put it in this way. I think we like to think about ourselves like an invisible layer of affordability. Okay. Flex Money's
Okay.
primary motto is to, make, how do we ensure that everyone who wants an affordable option to, make purchases around his aspirational, dreams right? How do we make that a reality, right? To do that, right, we ended up building, or we are in the process of building something, an invisible layer of affordability. So if you think about UPI, UPI made payments kind of invisible, right? You're just a tap away from
Yeah.
it, you finish it out. We're trying to do the same for credit. Okay, so Flex Money has built a tech ecosystem that can seamlessly plug into a merchant, like from Flipkart and Amazon to any offline retailers, right? And instantly enable them to offer EMIs. Okay, so you probably go to let's say Flipkart or Amazon, right? On Flipkart, probably you'll end up quickly finding CTA that says that pay with EMI, right? You click on that, immediately you can see all the EMI options that are available on this for you. That is tailored, personalized, and tailored for you, right? So the objective behind Flex Money is to do something like that. Right? Even in someone who thinks that, hey, I love to purchase this product, but I don't know whether I have upfront liquidity for it or not. If only some affordability was available, right? We are solving for that particular problem, because if you think about it, right, the current experience for a user, okay, on any, let's say, merchant platform, right, he does not have explicit visibility on what can be affordable for him, right? He has a bouquet of payment options available, and he has to choose. So that means it creates a lot of confusion in his head. Should I go for it? Should I not go for it? What do I do about it, right? What Flex Money does is that it creates a very easy pluggable solution that kind of envelops all the affordable options and give it to a merchant can simply plug it in his ecosystem, and voila, he can create users on his platform can make purchases using EMI options that are powered by the most trusted banks and bank lending partners in India, right? So in short, we are the bridge between banks, merchants, and customers, and we make affordability seamless.
Very, very unique. Karan, you mentioned that at Lazy Pay, because BNPL wasn't a concept that was heard before, you told us how, you made people adopt that way of transaction. But now at Flex Money, how has your experience target group, the non-credit card users? Uh, how do you think about the acquisition here?
See, so I think a part of that response is that the way we think at Flex Money, right? It's the gap is very similar to what I earlier talked about, right? There are just 3 crores or 30 million credit card users, right? And in the ecosystem, we have almost 400 million plus, digital shoppers, right? That means it's a ratio of 1:12, right? So the real
Hmm.
white space
Yeah.
is huge, okay? And that's what excited us at Flex Money insanely, that we want to ensure that we are able to serve for all these customers. Okay, so that means the really exciting segments are first time jobbers, young professionals, okay, or tier 2 tier 3 consumers, who all of them who want any some sort of aspirational product but might not have upfront visibility. So we don't think about like this, like we are pitching a loan to them. Okay, Flex Money never
Hmm.
thinks about it like that. For Flex Money, it's about embedding the right affordable option for that user in their natural buying journey. Okay, which means that their first experience, let's say with credit, becomes frictionless, transparent, and positive, thereby building long-term trust. So that's how Flex Money looks at the non-credit card users. How do you want to solve for them, and why they are so important and interesting for us.
Uh, just one follow question. So I know there are a lot of users who do not want to take the credit card for multiple reasons. Could be maybe they don't have enough information or legal issues, or they don't have enough financial history. But do you think by making credit accessible to the users of India this way, their mindset about credit cards would change eventually? Or maybe is it changing? Is there any pattern that you're observing?
I believe the mindset about credit changes, right? So right now in the ecosystem, right, there is a let's say fear about I don't want to take a loan. Okay,
Hmm.
it would probably impact my credit score. I don't want to take too many loans and everything, right? There's a lot of misconception about what a credit card has to offer, what in general credit has to offer, and how it can be utilized in an optimized format, right? By introducing in a credit in a very trustworthy format from trustworthy sources in itself, like banks like HDFC, ICICI, those big banks in itself, you kind of loop the user into a trustable and a very seamless experience. So one seamless experience tries him to do the second seamless experience, and so on. So this compounds, it's a compounding effect that you have to look at, right? And that's what builds trust at credit as a instrument in itself, that okay, I've learned to use credit, I have understood my repay capacity, I have understood how to pay back, I won't have a problem around it, I can adopt credit. So basically what Flexmoney is also trying to do is to bring users come forth, okay, use credit, experience it in a very seamless way, okay, and in a trustable way, okay, and continue using adopting credit for their purchase in itself, aspirational, daily, everything.
Makes sense. Um, so when, let's say, thinking from a user's perspective, at the checkout, um, did you see any small, can you think about any small nudges or, any small changes uh, that move adoption without being intrusive? And
Yeah.
on top of that, I just want to add one thing. Do you think that AI could be placed here, which would kind of make the experience even better for users? So, what are your thoughts on it?
See, to be very honest, in terms of when you want to in affordability, or when you want to make a sale, right, for a merchant or make a
Yeah.
purchase, design is a silent salesman, right? It's the small cues that matter the most. Okay. So while probably not on the checkout, generally checkouts, no one would want to mess with the checkout, because that's the part where user is making a decision in itself, right? But super small
Yeah.
nudges, right? Basis users eligibility, placing the right payment option upfront to him, right? Or
Mhm.
adding preferred payment options to him, or making minor tweaks, okay, around the language that is put. So instead of saying 18,000 rupees as the purchase amount for the user, right, when you add
Yeah.
like purchase it at, let's say, 1,500 per month, you know and that becomes a reality for him, right? These are the super small but very very important nudges that make a hell lot of difference for the user in itself. It basically adds to the confidence for the user. Okay, if it's 1,500, I can make the purchase, right? And the second part, when he gets the visibility that he can make it at 1,500, that's the second part of it. So a checkout basically works to give the right kind of product to the let's say financial product to the user, um, for utilization, so that he understands that this product is the best fit for him.
Got it, understood. And like again, for the AI perspective, have you seen it being implemented already, or you think maybe there's some more potential it has here specifically? I know you
So
mentioned you don't want to touch
no,
the checkout much, but
so AI in my head will start making an impact at scale, right? So think about it, when you have to process millions of users, right? At that
yeah.
point, the right kind of payment instrument, or the right kind of language, or the right kind of design cannot be thought through in milliseconds, and cannot be planned for by, let's say, manual interventions and all, right? So at that point, AI starts playing a crucial role when it helps you place or come up with a design that allows you to make the best use case for a user, or best representation to a user in itself. So probably for some users, let's say a tag or an offer tag makes the best sense, right? Depending on his cohort, or his payment purchase pattern, payment patterns, and so on, right? Or it could be something where you put an affordability upfront for him, say that this is available for 1,500, or he has an affinity towards a certain bank basis, let's say the type of credit cards he uses.
Mm,
So
yeah.
AI will become instrumental in processing that information and making an instant decision within milliseconds to showcase the right sort of experience to the user upfront. I think that's where AI will start making a real impact when you talk about explicitly to this use case on how it's gonna be valuable, say on a purchase journey for a user.
Makes sense. I think it's about, let's say you implement AI right from the beginning of the journey, and it keeps on collecting more and more data about the user, their preferences, and then, again, towards the end of the journey, it has accumulated so much, it can personalize everything according to what the user would prefer. I think I find that part extremely interesting. Um, so on that same end, Neeraj, I want to ask you kind of a similar question. Uh, let's say specifically at RevRag, um, what's one underrated part of the checkout journey where you think AI makes the most impact?
Yeah, so mm, so let me take an example. Uh, so we have been helping a company where we have put in an embedded agent for a FD-based credit card, right? And at the time of making, so not definitely checkout thing, right? But let's
Hmm.
say one of the important steps which makes or breaks the journey, right?
Makes sense, yeah.
So let's say FD based credit card, and obviously like first, and these FD based credit card are specifically for the users who don't banks basically don't offer any credit card of sort, and they have this aspiration, they want to own the credit card. Now, bitter truth is that like if they have to own the credit card, the quickest way, right, for them, according to the company, let's say, is the FD based credit card, where you create a FD of 5,000 rupees and then you can own the credit card. Now, obviously, at that page, right? So let's say out of 100%, X percent, right, of the users make the payment, right? And let's say Y%, they never had the intent of sort, right? But let's say Z% of the users were there who had the intent, right? But because of the trust or because of something, right, they they have dropped off, or basically they are taking more time than the usual customers who does the payment, right? So taking these, semi proxies or proxy events of sort, right, you can actually start nudging them right at the screen, right? So just to give a context how our embedded agents help you is, or basically any user, is that like just think of a user uh, which is sitting beside you, right? A person who is sitting beside you and he is looking at your app, right? And he is observing, right, what all activities you are doing at your app, right? And let's say whenever he notices you and your activities over the app, right, and see that like, hey, maybe you're gonna drop off, or maybe you are in the situation you seem to be confused, right? So that is where it pitches in, right, as a web call, right? So obviously, basis on the business requirement, you can activate that widget, right? It can be automatically can be triggered, right? So for example, if you put in wrong PAN number or if you put in wrong format DOB, it will obviously pitch in, right? As a lot of time people do not realize that like first they are putting, let's say, month and then date, right? In case of the DOB, vice versa, right? So that is wherein pitches, right? So let's say this was the scenario where we were helping this company, right, or this application. So a lot of users corresponding to Z percentage, right? So they have been asking a lot of questions, right? How do I believe that like I will get a credit card, right? How do I know that like you will not take my money away, right? So they were genuine users, right? So obviously like let's say Kannan also mentioned, right? In order to create a convergence or basically the trust, right, there are many things, right? So maybe in future they will have better branded banks as well, right? That is their one of the things, right? Let's say some very small bank is there and let's say some tier 4 user is there, they might not be aware, right? Had it been SBI, SDFC of the worlds, right? So that is where then there is no question of the trust, right? Uh, they would have seen thousand of times that name, right? So that is where these embedded agents give you a better context, right? And they help you, they talk to you, right? So we have taken altogether a proactive approach there, right? So these embedded agents altogether take a proactive approach, helping the users while the industry operates on once the user drops off and then they call, right? What we do is like while they are on the application, apart from all the efforts business slash product team is taking, right? So these embedded agents, you know, do their extra, right? Put their extra delta, right, to take those users to the next level, right? So that is what like I have seen from the, helping them from crossing that particular, you can say, a resistance of sort, right? Where the actual intent was there, but maybe these users needed some extra push.
Makes total sense. I think we have like the perfect set of guests for this discussion. One guest tells about, how the foundation of those products are, and the second one tells about how to embed AI in AI agents specifically into the journey. Now, Karan, we've spoken about, your time at LazyPay and at Flexmoney as well. Um, Now is the time to kind of dive into the AI bucket, wherein we can try to understand how it impacts and how it can impact several products in the future. So, I want to ask you one question. How do you see AI improving real-time risk scoring uh, or fraud detection for products like you are building?
Actually, I think that's one of the most relevant places where AI can actually, actively be available, or play an active role
Hmm.
against any other section of financial instrumentations itself. Traditionally, think about how do you look at risk, right? You look at just bureau data, some basic, let's say, user information, some checks to avoid risk or frauds or anything, right? Now think about when how can AI kind of get plugged into the ecosystem and kind of pull a lot of things together. So when a fraud, I'll probably talk about fraud, because I think that's insanely relevant when it comes to AI, right? So as of today, there are multiple ways to do frauds. So there can be let's say an account takeover that happens. There can be synthetic IDs that is happening, or some the fraudster is generating synthetic IDs, or is kind of taking over your identity fraud is happening, or mule accounts are being used to do the fraud and everything. So while each category of fraud has been identified and we know about it, right? But the solution to solve for it, right, they are bifurcated as of today, right? You can put in device fingerprint, you can look at IP location, you can look at shopping pattern and everything. But think about it. Can we as a system, right, look at all these solutions in a fragmented and segmented fashion and start identifying the type of fraud and apply the solution correspondingly? It's a massive overload, right? So where how does AI come into this picture, right? If you can embed an AI, right, and that AI can actually talk to these multiple ecosystems, look at the user pattern in itself, right? I'll give you an example. Assume that a swim swap happened 10 minutes before your transaction, right? So instead of reacting after the fraud, that AI will allow you to probably predict and
Hmm.
expose that adjust that exposure in itself, right? So similarly, if you think about it, right, if the device pattern, or let's say the address to which you are kind of let's say delivering, right, suddenly
Hmm.
changes after let's say 24 deliveries, right? AI will be able to rightfully detect that, okay, there is a slight anomaly. Should I add trigger a few more checks? Right, let me check whether it's the same device ID or not. Okay, let me check whether the geolocation is the right or not, right? So it can put in,
Yeah.
let me check whether it's a, if the phone number or phone number that has been in use, right, it's whether it's part of some neural network or not, right? So AI will be very conveniently be placed into an ecosystem where it can talk to all these solutions, or can de- track the patterns and decide what to implement to prevent and identify fraud in itself. I think AI is insanely relevant over in this section.
I mean, it's quite interesting how you mentioned, right? If there are any anomalies after so many transactions, AI can detect it and bring it to your attention. Uh, Talking about AI, Karan, if I were to bring up voice AI, let's say let's take a scenario. Let's say there's a voice agent. Uh, calling somebody who has dropped off after seeing a credit option. Do you think that could uh, move the needle a bit?
It could, but there are, let's say, in my head, there are certain conditions to it, right?
Hmm.
Number one, right? Can it win the trust, right, of the user? So a user doesn't drop off because he doesn't have a purchase, intent, right? He might be window
Hmm.
shopping, but after a certain step, let's say he has selected the payment option, probably progressed a couple of steps and is dropping off at the OTP, right? That means that user has a very strong purchase intent and has kind of dropped off because of multiple reasons. One of it being, he's not really exposed to that payment instrument, so he wants to make the
Hmm.
purchase but is not sure about it, right? So that's, yeah. So AI can definitely come in, a call immediately going on drop off, right, to the user saying that, hey, why are you, don't worry, this is a trusted source and everything. AI can definitely make a difference in terms of, a voice call in itself, but everything depends on the tone, on how it is convincing the user. It shouldn't feel like a collection call. It should feel like a concierge service.
Absolutely. Um, let's say, I mean, of course, India has so many languages. So if anybody in AI agent have to take that into account. So, I mean, what if, you know, there are a lot of users who have a lot of trust issues, like you mentioned, while purchasing something. And let's say the amount of a transaction is quite big. So what about multilingual AI agents that are embedded in the app and they kind of explain about the transaction, the EMIs, the whole process, the timelines to the users? Do you think if something like this happens, this could make a difference in different kinds of cities across India?
Actually, that is a very, very relevant use case. Okay, so it's very difficult to build a multilingual ecosystem. And okay, so if you think about, someone who is offering a financial instrument, right? For
Mhm.
him to build multiple products, multiple journeys, okay, understanding different kind of users in itself from each city in itself or each region in itself, and trying to build something, natively, let's say a language ecosystem also. Just think about it, the kind of load that we would see, right? And the kind of, pressure that it would exert on the entire ecosystem. Anything that can break that language barrier, right? It's going to be let's say one of the biggest finds for us, right? We will, for sure, it will give us the break that you need. So as of today, if you think about it, credit instruments are majorly adopted across tier 1, tier 2 cities, right? So how do you break into tier 3, tier 4, right? One of
Mm.
the primary reasons why it is not, you're not able to break into tier 3, tier 4 is language, right? Primarily tier 3, tier 4 users might not be comfortable with English as a language, right? They might prefer to have their own native language, which allows them to trust the journey in itself. Okay, and that's where, when AI is able to very easily transition that language barrier for them, will give you the instant boost that you need. It's all about familiarity. It's all about the familiarity that builds trust for him. And in my head, I honestly believe a multi-language AI will kind of, if done right, will unlock the next 100 million Indians entering formal credit.
That's, I mean, I just kind of want to add on to that fact that you mentioned. Um, so when you're entering tier two, tier three cities, it's really hard to break in because, of course, linguistic barriers. Neeraj, how has your experience been with, you've been experimenting with a lot of languages at RevRag. How have the agents been, and how have people reacted to, agents speaking in different languages? Like, do they believe that, okay, that's a real human? Or, I mean, can you tell us a bit about that?
No, so obviously, we have come a long way, but I would still say that, like, in totality, it's still day one, right? We have to go further, right? So I will just give you a couple example, right? So the whole voice tech itself, right, it started with the global languages per se, right? And they have, reached to great heights, right? So there are many good projects out there, right? who have done excellent job, right, understanding the emotions, right, and whatnot. So, but if you talk specifically about India, right? So, voice companies, for example, 11 Labs, right? They have done fantastic job. But let's say India is all about, many languages and many dialects, right? So how do you take care of that, right? And these, you can say, 11 labs of the world, right? They have tried their best and they're trying, right? So very soon, multilingual APIs will also be out from the 11 labs, right? 11 labs of the world, right? In-house Servam is also trying a lot, right? But I would give you one example, right? Other day, one of the, customers, right, to our embedded agent says that like, uh, तेरा इंटरेस्ट रेट तो काढ़े है या फिर some very ठेठ राजस्थानी, right? Very ठेठ
Yeah.
राजस्थानी, right? Now this agent couldn't understand, right? So I wanted to understand that like what exactly did he say, and obviously agent requested again, right? कि आप मेरे को दोबारा बोलो, right? Can I didn't understand, right? उसने
Yeah.
3 बार, he this user actually said 3 times, right? So user was absolutely correct, right? We are lagging, right? So I envision a day, right, where even before the conversation happens, right, we know the exact dialect, right, of that guy, right, and we are
Hmm.
talking to him in the same dialect, right. That is where like Kannan was also mentioning that like the familiarity, right. So just think of a person belonging to a tier 3, tier 4 town near to Bikaner of the side, right? And he might be having, and he is not uneducated, right, or illiterate, right? But he talks, he loves talking in his language, for example, right? So one day, like he either gets a call from the AI, right, and exactly talks in the same dialect, right? So that would be very awesome experience for this guy, right, which will be curated especially for him, right? So kind of trust and familiarity it will have, this guy will have, right? Obviously it will take the trust on the next level, right? So if I have to summarize, I think that like we are still on day one, we have to go a long way, right? Especially for India, I would say, right? Because it deals with lot and lot of the dialects, and in dialects also a lot of variations per se. So yeah, lot of work needs to be done.
I mean, I hope that day comes really close,
Hmm.
that we can actually think of implementing these. Um, I mean, we've covered almost everything, and we are almost towards the end of the episode. Karan, I would just want to ask you if there's any suggestion that you would like to give to product leaders who want to bring AI into credit or transactional credit. What would you say?
I think first of all, most of the product leaders are as probably better than me, right? Most of them are way more knowledgeable than I am. But I think I would give you my 2 cents, right? Rather than it won't be an advice for anyone because I know most of them know better than me. Uh, my 2 cents are that ideally I think we shouldn't use AI uh, just as another tool. It ideally should become a sort of co-pilot, right? You have to have the handle on it, and you don't let it be on autopilot. Okay, so in a nutshell, I believe we have to learn to use AI to scale trust, not to use it as a shortcut to something. So if you approach it as a trust amplifier, right, you'll end up building systems that will be insanely powerful and sustainable for us. I hope that is good enough.
No, that is completely valid. So thank you so much for that. And thanks to you, Neeraj, as well.
Thank you.
So we have now come to the end of the episode, and I would like to thank you, Kanan, for taking our time and coming up and explaining the whole transactional credit journey. I mean, I personally got to know a lot about how people reacted to BNPL or credit products early in the days, and how um, you kind of used UPI to build on it. And thanks, Neeraj, for always, you know, telling in the nuances about embedding AI agents into the journeys and what all your latest experiences were, like you just mentioned, with one of the clients. So thanks to the both of you, and to yeah, to everybody watching this episode. Thank you so much. It was, we spoke a lot about transaction credit, BNPL, how it was in the early days, Kanan's experience scaling products at LazyPay and then Flexmoney, and how AI comes into the picture. If you want to watch the full episode, it's on our YouTube channel. Thank you so much. Thanks, Siraj. Thanks, Kanan. Goodbye.
Thanks, Neeraj. Thank you, guys.